Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
Boom, guys, welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske with Benzinga, sponsored by Apex Trader Funding. And do we have a great show in store for you guys? We've had some crazy volatility the past few days. And in this video, in this episode, I'm going to show you guys and explain to you why we have this extra volatility and where this uncertainty is sort of stemming from. So stick around, give you some ideas on how to trade these market conditions and some tools you could use as well to make sure you're not over leveraging into any positions. So let's get into it, guys. I'm your host, Kevin Dubriske. What's on today's agenda? We're going to go over how Apex Trader Funding works, how you could profit with a prop firm, live market insights, and trade setup. So again, I'm going to tell you guys some tips and tricks on how to sort of trade during this market uncertainty. I'm going to show you guys a really cool tool that I like to use that helps me measure how many contracts I should be trading at my predetermined risk. And of course, we have our giveaways. Guys, make sure you fill out the form in the comments for a chance to win a free Apex Trader evaluation account. That account would be any size of your choosing between 25K to 300K. And guys, guess what? They still have a major sale. They just extended their 80% off till July 24th. So make sure you use discount code FFEVER for Futures Fever. So why trade with Apex Trader Funding? Guys, let me tell you, Apex Trader Funding is not only one of the best top prop firms out there, but it's the fact that they give us such great sales and opportunities as well. It really benefits the newer beginner traders, because when you're starting out, you have to sort of have some upper hand. You can't really be risking 5,000, 10,000 of your own capital. So what helps is you get a prop firm like Apex Trader Funding, and you're able to say, okay, here's 30 right now, 80% off, 50K account. It is 30%, is about $36. Right, so $36 for an evaluation account. And then they also have a major sale on their funded fee for only $140. So let's say you buy an eval and let's say you get funded. That in total is only about $170, $180 after tax of your own capital, with then given the opportunity to take payout. So that's really great of Apex to do. You get access to firm capital to trade futures markets. You're not trading options, you're not trading stocks, you're trading futures. The ES is the S&P 500, NQ is the NASDAQ. You can look at GC, which is gold, and CL, which is crude oil. You earn up to 90% off of profits, but you keep 100% of the first 25K you make. And zero personal liability, guys. Trade stress-free. Now, I don't want to confuse anybody. A lot of times people will get with prop firms, and over time they'll start to get a little too distracted, and they'll think, oh, okay, I blow this eval, that's fine, I'll buy another one, I could start over. But then you end up in a cycle where you're not really focusing on your own trading system, your own strategy, and your own routine. Guys, that is the number one thing as traders, is to focus on our routine and system. An efficient way to scale and grow as a trader. So that's, again, what makes Apex so great, is it gives us the opportunity to not trade with one, not 5, not 10, but up to 20 different Apex accounts. So whether you want to trade all 20 accounts, that's up to you. If you want to maybe copy in bundles of 5 and take it slow, right, just in case you end up blowing them, you have the other 15 in store, right? That's another great way to take Apex for what it is. Gives us the opportunity to have 20 accounts and say, okay, I now have 20 funded. I'm going to take my time, because listen, guys, 5 accounts, a 50K account, $2,000 per payout, 2 times, that's 10 grand a payout, and you could do that twice a month. That's 20 grand in the month. And again, you have those other accounts behind you in case you need them. Now, let's say you've been consistent enough, you want to start copy trading the 5 to 10. Now you're on the 10. Or if you want to just go all in and stay with the 20, that is also okay. Apex doesn't penalize anybody. Trade how you want. They do have some rules we want to follow. If you have any questions on the rules, please let me know. I have the answers. I've been with Apex for a long time trading wise. Been around the block when it comes to prop firms. They're probably the number one prop firm I recommend for traders because of how efficient they are, how easy they are to work with, and their great sale opportunities. So it's a three-step process, guys. You pass the evaluation account. They give you an eval 50K account. Your profit target is 3,000 and your trail stop is 2,500. So if you hit 2,500 in losses first, you blow the account and you could start over. If you hit 3,000 and you close the day out above your $3,000 target, you'll get an email. They'll say congratulations and they'll have you do a signature. They'll give you your certificate and then you pay the PA fee, right? That's your performance account. PA is performance account. Then step 2, you get funded. They give you a fresh new 50K account. Now, once you hit that 3,000, you're able to start taking profits above that. So I believe 2,600 is actually where you're able to start taking profits out of the 50K account. So anything above 2,600 on the 50K is considered profits that you could withdraw. And then, of course, you withdraw those profits, as I just mentioned. So very easy process. Evaluation, you get funded, you get paid out. Sometimes other prop firms, they have two-step processes, three-step processes. Two-step process, you have to make 3% the first time and 5% the second time, and it's not necessary, right? Apex keeps it nice and simple for us, gives us the opportunity to scale up if we want to, scale down if we want to. There's no long-term contracts, flexible rules, and very scalable opportunities. They are running that major sale, as I mentioned before, guys. 80% off with promo code FFEVER. This ends July 24th. Brings a lot of those accounts down to a very nice price. $50 resets as well across the board. And lifetime one-time performance account fees are set to $140 for the one-time fee. Now, some of the accounts have a monthly fee of $100, which is less, but that's a monthly fee. So if you do hold the account month into month into month, well, then you're going to be paying $100, $100, $100. However, something to mention on that is if you are holding the account that long, you should be seeing some payouts. $500 here, $1,000 here, $2,000 here. So those little $100 monthly fees should sort of keep you in line, right? So let's say I blow the account. I want to spend the 100 on the monthly. If I blow the account, then I can't pay the monthly, and that's fine because I blew the account. I don't need it. I don't have it anymore. I could start over. Let's say you have the monthly account, you get a payout, say, okay, great, I made 2,000. I know I have to keep just 100 aside. They're going to bill me, but that's still $1,900 in profit from that one account for you guys. That's what Apex gives us. It gives us the opportunity to take nice payouts. Now, I had mentioned here $521 million in payouts since 2022. I actually think it's more at this point, and we'll check the Apex website in just a minute. But don't forget, guys, fill out that form in the comments below right now for a chance to win a free Apex Trader evaluation account. It's a great company to work with. They're a fantastic prop firm. They have great brokers that they work with, so you're able to integrate them with things like TradeOvate, TradingView, Rhythmic, and now they have Wealth Charts, which is another great option for copy traders. So really is a great thing, guys. Fill out that form in the comments for the chance to win. Last week's winner was Shannon, guys. Congratulations to Shannon, and don't forget, hit that like and subscribe button. We go live every Wednesday at 11:30 a.m. Eastern till 12:30. Go over some market sentiment. Now, guys, why have markets been so range bound? I'm going to show you guys a quick glimpse of what we've had in the market the past just 2 days or so, right? And look how poor price action's been, right? We've had a huge sell-off on this day right here. This is for about 50 points to the downside. Now, 50 points isn't even that big of a move in the sense of ES has seen some much stronger volatility. So now I'm pulling us to the 30-minute time frame, and we sort of see that yesterday, this was Tuesday's price action, went nowhere fast. It started to push lower, it failed, it pushed higher, it failed, it pushed lower, it failed. Same thing happened today, right? New York session opened. Even before New York session opened, we started rallying around 8:30, 9 o'clock. We moved up probably about that same 25 points to a supply zone. This is an area we rejected as resistance before, and then we rejected it again today. So we could look to delete. This zone is no longer relevant. And we see this was a pretty nice trade. I actually caught this trade with some of our members in the Bullish Bears community. I do live trade there Monday through Friday. And what we do, guys, is I get on at 8:30 to do some pre-market prep. So at 8:30, I was able to say, guys, hey, listen, you know what? Let's go to the replay mode. Let's look back. See if it'll let me work. Select date. Now let's do select bar. And we'll go to our 8:30 candle. So I was looking at the 15-minute time frame, and my thought was, guys, listen, this area right here, and we'll turn off our volume profile for now too. This area between 62.83 and 62.88 has been a major resistance point on the ES. And even on Monday, it worked as support. Then we broke it and it started working as resistance 3-4 times, right? A handful of times. So what I was looking for in the pre-market was I was looking for this 15-minute basing to be followed through with a rally candle. And that's exactly what we got. So I wasn't able to get my entry because what I was looking for was a retest back into this broken supply zone for a long position. So I was looking for longs from this zone to target the next supply zone. So you guys see it's not as complicated as I need this initial balance, I need to mark it out, I need to throw my fib up, I need to get the extension. Support and resistance, or supply and demand, however you want to cut it, gives us some basic market structure to give us good levels to watch for, right? Price levels that historically markets have reacted to. Historically, markets are reacting here, 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 and here. The next point of interest would be up here. If we look left, we have an area of resistance 1, 2, 3 times. So it would only make sense that when price moves back up there again, we're going to find that same selling pressure, right? Because we look for markets to repeat themselves. We look for zones to hold. And that's what's so great with things like supply and demand, support and resistance, is instead of taking trades on the 5-minute down here, right? So New York session opened right here. We rallied. We didn't really get a good pullback entry, and that's okay. When we notice we don't have a pullback entry, then we want to be a little patient and wait to see if any sellers want to end up trapped up here. Because once we see selling pressure come in, now I also had this purple level was I called a BSL, that's a buy side liquidity. Now that was a pivot high from Monday morning, right? So Monday's price action in the morning, it was a pivot high. We swept that. It was also a pretty strong level on Bookmap as well. So I'm going to show you guys, this is the ES on Bookmap. When we traded into it right over here, look how weak the buying pressure got. So we had really aggressive buying pressure moving higher. Then we had one last big buy bubble, but we failed to move higher. So this is where we sort of speak about how volume and price needs to move together. While we were moving higher in price on this run up, volume was also moving higher. Once we started hitting this peak at our price level in a supply zone and we had a big buyer, somebody was absorbing this, or else we would have continued. If nobody was there to absorb all these buyers, right? So for every buyer, there's a seller and vice versa. They absorbed this buyer and was able to hold it as a strong wall. And when we zoom in, we see right here, 63.15. This was 128 on the ask. So there was a passive seller waiting to get filled to short ES at that 63.15. So with that information, once we started rejecting, that's when I was able to confidently say, okay, guys, I want to take this short position. We have a few confluences right now. We have our supply zone. This isn't just a supply zone. This is a supply zone that has proven to be a very strong area of resistance. Not only that, but it's a supply zone that has an area that we have a pivot, which is our buy side liquidity. And last time we had a buy side liquidity in this supply zone, look what happened. We had a big sell-off. So it's giving me the same setup in the same zone. I'm going to take that 10 out of 10 times, right? That's something we want to really look for because it doesn't happen every day, but it happens enough that as traders, we want to be looking for it because it's a consistent system that we could trade with. So anyways, what I like to do at that point, guys, is I would either look to target VWAP or the next area of demand. So because we created a 15-minute demand zone down here, I almost forgot to mention the reason why markets have been so erratic lately. And I will mention that. Actually, let's cover it right now, guys. So as most of you know, markets gave us a wild reaction when Trump started talking about tariffs and a trade war on Canada and Mexico back in, this was about late January, early February, and markets gave us a huge sell-off. I mean, we sold off over, I think it was 22% on the S&P 500. 22%. A correction territory is anything below 10%. Crashes usually is below 20%. But with that being said, markets weren't going anywhere. Companies weren't going bankrupt. It gave a fantastic buying opportunity. But what gave us that reversal? I guess what I really want to tell you guys, what I really want to show you, and let's pull up another chart over here so I could show us ES. We're going to look at the daily time frame, and I'm going to show you what gave us our daily reversals, right? So here's when the tariffs on Canada and Mexico started stepping in, right? This is mid-February. We sold off. Markets were very bearish on that fact. A trade war is scary. There's a lot of uncertainty in any kind of war, let alone a trade war. What's this going to bring to our economy? We sold off, if we measure it, sold off over 20%, 21%. Huge sell-off. It didn't even mark the high. The high's a few points higher. What gave us the reversal, though? What gave us the reversal was the tariff deal or the tariff relief. Now, back in April, this is when we had our original tariff deadline, trade deal deadline, and Trump announces it's Liberation Day, yada, yada. The following day, he comes in and he says, we're lifting all trades, all tariffs on all countries except for China. So it's our first sign of trade relief. It's our first sign of, okay, maybe things could turn around. And markets were able to give us a very strong, impactful move from that. I mean, we moved up 10% in a single day on the ES. With that being said, now we have our second tariffs being pushed back. So today is July 9th. We were supposed to have our trade deals come in today. Instead, what happened, and we see it in our article here on Benzinga, and I'll share that link with you guys as well, is the tariff deal got delayed. Now we're looking at August 1st. So how were markets reacting? Well, we see how markets are reacting. Markets gave us a huge spike going into it. Markets were then able to settle and give us a huge sell-off. So what I like to do, guys, myself, to understand market structure, market sentiment, and sort of market direction in a total is to really keep an eye on those recent daily highs and lows to see where we're currently trading at. So right now, something I notice is we're sort of starting to run out of steam here. So we had a nice strong rally since this was June 23rd, Monday. This is when we bombed Iran. And markets actually gave us a strong reaction where everybody was thinking bearish, we're going to war, this isn't good. Markets actually gave us the reverse of that, right? So it gave us a strong rally up over 360 points on the ES, since then over 6%. However, now we started to stall out. This was Thursday. We had our last strong rally. This was our Monday candle, which sort of gave us a pullback because of that uncertainty coming into the deadline on the tariff deal. Now we got that tariff deal saying, hey, we're being pushed back again. Now the question is, are we able to start breaking some major levels? So the next major level I'd look for on the ES is 62.46. So we're going to mark that out as a major level. We'll do all caps, major. And we could even throw an emoji on there so we know to look for bears. So major bears, we're going to add an alert to this as well, so that when and if price moves to this point, we get notified. We're not missing the move, so to speak. Now, something else I would look for, let's add our alert to this first. We'll add alert. We'll make sure our message says major bear cross. Now, that's what I would look for. I'd look to see if we could break below 62.46 and hold below it, right, with strength. I want to see volume on our subgraph start to pick up on that breakdown. Then I might even look to see if price could return back towards this 60.38 level. If anything, guys, I would really call it that 6,000 level. That's a key psychological level that a lot of traders and institutions will be watching. Key psychological level 6,000 right over there. And that is from that. It's about late June's, I wouldn't say lows. Yeah, about. We could check the weekly time frame and keep an eye on that, see where that was currently trading at. Even the monthly, and we'll look to see, okay, so where are we? 6,000. Yep, 6,000 right over here. That is near the June lows. So, right, so if we could see our monthly start to pull back, then great, that'll help us. However, looking at this monthly time frame, this doesn't really tell me bearish, right? We had a huge wick lower. This was trapping a lot of sellers. This is when we had that whole scare. But then we had that pullback from the tariff relief. This is April, right? Because we continued to sell off in April until about April 7th, April 8th. We had that huge reversal. We pulled back. Now, what I notice is on the past two monthly candles, is we have strong buying. We have strong buying, very short upper wicks. When we have short upper wicks, that means buyers were able to hold us that almost that entire time until closure. With that being said, I would remain bullish on that fact, and I would even maybe look to mark out our monthly open price. Guys, it's so important to mark out higher time frame price levels, especially when you're doing your own analysis, because this will help you see the bigger picture, especially when you're day trading. And a lot of people who are here do trade futures, 5-minute, maybe even a 1-minute or 15-minute chart, well, it's still important and it's still relevant to know where's our monthly open right now. Are we green on the monthly time frame? We green on the weekly, the daily? The daily's the most important, but understanding other things like the monthly and weekly also helps give us a bigger picture. So like right now, this monthly open, monthly.o for our monthly open. Now I'd keep an eye on that, right? It could even add an alert there. Let's come back to our 30-minute, or we'll go to the 1 hour, I should say. And look at this, our monthly open is right near that major level. So very strong point. I see this was this was a demand zone on the 2 hour. I had it marked out. It's funny, guys. I had it marked out red because I was teaching somebody how to mark supply and demand. But at this point, when I was showing them, we were making all-time highs. So when we make all-time highs, there are no new supply zones that form. So what I did was I came down to the bottom right in the on Trading View, and you could click Invert Scale. And then it gives you the inverse of what you're looking at. So if you're somebody who's perma bull, perma bear, is better off in a bear market than a bull market, but we're making all-time highs and you need to trade anyways because you can't just not trade because we're going in the opposite direction, you could invert the scale if that's easier on you. Now, another trick with TradingView that I'd love to show you guys, and I mentioned earlier in this stream that I wanted to show you guys some tricks on how to trade these markets. And a trick I'm going to show you guys, I'm going to pull up the trading panel. We'll connect to a paper trading for now. And I want to show you guys how to use the long and short position tool. This is a phenomenal tool that will keep you trading in the long run and will keep your losses to a minimum. So what we're going to do is we're going to come to the left-hand side over here. We have our long position, short position. We're going to start with our long position. Let's say we wanted a long down here off of this candle. We wanted our stop loss at that low. Now what we can do is we could drag our take profit to the high. And let's say this was our trade setup. What we could do is we could double tap and we could go into settings. And you could set your account size. So let's say you're on a 100K account, or we'll say for Apex wise, 150K account, and your risk is $500. Then it'll tell you, okay, to risk $500. Now I'm going to break down for you guys what all of these numbers mean. So right now I'm going to drag the take profit up and down. And what we'll see is we'll see this number moves. That's how many points and ticks this take profit is from your entry point. And it also tells you percentage wise. This isn't that important. What's important is the points. And then it also tells you your account total once that take profit is hit with that many contracts. Now, what's also great with this tool, guys, is watch what happens when I move the stop loss. And I want you to watch this 2 right here, this 2.22. When I move my stop loss lower, that number gets smaller. What that number is telling me is how many contracts on the ES, because I'm on the ES chart, I could trade to risk $500 on this trade. So to have a 6.25 stop loss on the ES, it says I could trade 1.6 contracts. Now, obviously, we can't trade 0.6 of a micro. I'm sorry, of a mini. So we would have to trade a micro. So at that point, we could go to something like the MES, come over here and draw the same drawing tool, right? So we knew it was from this 5-minute candle, the high, the low. Look to drag this out. And because we're on our paper trading, I'll show you how to execute it as well. Now, right now, it tells me 15 contracts, right? Before it was saying 1.6. Well, now it says 15 because it's not going to give me 1.6 anymore because a micro is 1/10 of the size of a mini. So how we would execute this trade is we would right click and we would hit create limit order. But first, we do have to make sure our account is connected. We'll hit create limit order. And what it does is, check this out, guys. It gives me my take profit, $2,625 for take profit. How many contracts? 15. And how much my risk is with my stop loss down here. So 15 contracts, I'd be risking $487 and I'd be gaining $2,600. This trade setup is a 5.3 to 1 risk to reward. So where this number says 5.38, that's our risk to reward. So if I tighten up my stop loss, we'll see that my risk to reward is now a 6.0. Plus, now I could trade even more contracts because my set limit was 500. So now if I canceled this, I create limit order one more time, it'll give me 17 contracts and still only 488 of my stop loss for however much I'm risking on that trade. Then you would come and click buy over here on the right side, or you could also click it here on the chart as well. And what that'll do is that will activate the limit order. So it won't fill you if price is trading over here. It's not going to automatically fill you up here. It's going to wait till price wicks down and hits that level. Hey, what's going on, Shujat? Good morning, guys. Good morning. Good afternoon, I should say. It is nearing 12 o'clock, guys. Markets have been very all over the place. We got a lot going on. Any questions, guys, please let me know in the chat. Always happy to help. Let's take a look at gold markets now, because a lot of times when there is uncertainty in the economy and globally, gold ends up performing well. Now, something to point out with gold, and let me delete some of these old alerts, is gold has been in an extreme range. What I say by extreme range is we've been range bound since that early April. This is April 11th right here. We started our rally on April 8th, right? So again, Liberation Day, markets rallied, gold rallied, everything rallied. A little bit of a worry when everything rallies together like that, but we ended up moving 500 points. Since then, this is now about April 20th. We've been in a huge range on gold, about 240 point range, lows around 32.25, highs around 34.62. What trades am I making? So I'm usually trading. Is a great question to learn with Moses. So I'm trading on the 5-minute and 15-minute time frame, and I usually trade between 8:30 a.m. and 11 a.m. Eastern. So I'll get on the markets around 8:30, do my pre-market prep. I usually don't like to trade the ES and NQ before the New York session opens. However, if something like gold or oil gives me a good opportunity, I will trade those, because those don't essentially need the New York session volume. They're very heavily traded across the world. So this is gold. Let's take a look at gold, right? We looked at the daily. We saw how range bound we are. Now, something I do during that pre-market prep is I mark out the previous day high. I mark out the previous day low. That's PDH, previous day high, PDL, previous day low. And then I'll come to our current daily candle and I'll mark out our open price, because when I mark out our open price, it gives me an idea of where we're currently trading at, if we're bullish on the day or bearish on the day. So something I'd note with gold is, guess what? We've been extremely range bound, so I wouldn't really be looking for continuation on those breaks below new low of day. Now, usually if we're trending, just like something here on gold, when we break a previous day high, we continue higher. We break a previous day high, we continue higher, and that sort of went on for the full bull trend. Now, for the bear trend, we're not really getting that much of continuation. We see right over here, this was Wednesday, and then this was Thursday. So Thursday broke that previous day's low, and it did continue lower. But then followed by that was Friday breaking previous day low and reversing back higher. So I noticed that on these bear moves on gold, we're really struggling to move lower. Buyers aren't quite giving up yet on gold. So I do want to be careful. Gold is sort of considered the safe haven when it comes to economic or even global disruption and issue. So if there is some type of worry going on, usually gold is that safe haven people will invest in. With that being said, markets have also been pretty bullish for the most part. I canceled out that paper trade before. Let's cancel out our replay system, see where markets are currently trading at, and see if we do have any possible setups coming up. So here we had a 15-minute area of support, and as you guys see, we broke it a few times. So this would no longer be an area of demand. Whenever I find my supply and demand zones, I want to make sure that they're able to hold. And once they start to break, if they break with strength, I'll use it as resistance. However, if we break it and reject back higher, I just want to use it as an area of interest, because that tells me buyers had some interest down there. However, they weren't really quite able to hold it, right? We broke that low. Thoughts on the volatility we are getting in the morning NQ before FOMC meeting? Yep, we got FOMC meeting today. Historically, it's very choppy on these days. That's true. That's true. Yeah, no, but we got a pretty nice sell-off of supply. This is ES. We could pull up the NASDAQ as well and see what we're looking at on NQ. Pull up that hourly chart. So I see that we had a pivot high up here. This was from Thursday's high. And look at how price reacted to that Thursday high. Again, guys, markets love to react to recent highs, recent lows, and create areas of support and resistance, right? Now, when I say love to react, I'm not saying that nonchalantly. I'm saying that in the sense that it's going to happen. It's going to happen because there's never going to be a time that we get a breakout here and people aren't heavily buying a breakout, right? It's always going to happen, whether institutions are buying a breakout, whether retail's hoarding in and buying a breakout, and they do tend to fail most of the time, right? I always think of the quote, forget who said it, but markets historically range 80% of the time. With that being said, most of these breakouts or breakdowns will be followed with a reversal or at least a pullback. I mean, check this out, guys. We pushed higher. We hit that high from, what did we say, last Thursday, and we rejected it on NASDAQ, a very strong rejection at that. And then we came all the way back down to this pivot low we created overnight. Now, we haven't swept those other lows yet, and that's something that I would be looking for. Yo, you got it, guys. Absolutely. But something I don't know, guys. Me personally, I really wanted to see how that trade deal would come in today. Them coming in and saying, oh, well, we're going to move it back to August 1st now. Is this the taco trade? Is this, guys, hit that like button if this is the taco trade everybody's been talking about, right? The Trump always chickens out. Who said that? The taco trade. What's going on now? Are we making a trade deal? Are we not? Are we waiting? I got to see what's going on. But now that we had that sell-off off of this high, I'm able to find a new supply zone. So let's delete this broken one. That's not relevant. This green level, that's not relevant either. That was a key level from an intraday perspective. And let's mark out our new supply zone right here. We're going to use hours. Now, you can make templates, guys. What's cool with TradingView is you could edit your rectangle, and let's say you want to make this a supply zone, so you make it red. And let's say you want to extend it to the right all the way. Instead of dragging it out yourself, you're able to turn on extend right. Once you create however you want your template to be, you're going to come over to template, hit save as, and then give it a name. So myself, I have these saved as supply and demand. So I click it, it brings the pop-up, and then I'm going to come over here to template and come over down to supply. And now I have my supply zone marked. I have the same thing going for my trend lines. So I click my horizontal, I believe it's the horizontal ray tool, and I click that. I'm going to click it from the opening price of my supply zone. And then same thing, I have templates saved. I have D, 1 hour, 2 hour, all the way up to 8 hour. We can delete 8 hour, not really necessary. I haven't used that in a while. But 1 hour, I also have some 15-minute, 30-minute, 45-minute, and then I have S 1 hour in the same deal. And the reason I have two of them is because these are supply, S, these are demand. If I had them all saved as the same thing, I'm not going to be able to have reds and greens. It's all either going to be one color or it's going to be very confusing. So that's a great way to separate them. So S, and now I know this is a 15-minute time frame. And there we go. Now I have my supply zone marked out. I can delete that price level. Now going into tomorrow, I have a price point that I'm going to look for sellers on the NASDAQ. Just like that. Just doing my analysis, seeing that, hey, look at this. We broke this high. We had a very strong rejection lower. We even came down to a new low. So I would like to see if we could now create a a lower high off of this point. And that would look something like this, guys. I'm going to show you. So we'll have our arc tool. So this was our higher high. This was and now we could click that, control and drag. This was our higher high after this high. So now because a new supply zone formed, that's an area with active sellers, I'd like to see if we could create a lower high inside the supply. So then I would look for a short position in supply, stop loss at the high. Now, guys, whenever you're taking a trade, your stop loss should be wherever your analysis is incorrect. If you're taking a trade, let's say you're taking this trade on NASDAQ, right? Now, this current setup has a 25-point stop loss. That's a pretty big stop loss for NASDAQ. Some people, if you only want to trade or risk $200, you're not going to be able to have a 25-point stop loss. You might try to force it lower to a 10-point stop loss, but that's not telling you your analysis is incorrect when it stops you out. Because if you have a stop loss here, that's not at the supply zone high. Because guess what? We could break that stop loss and reject lower again. And we don't want to be a falling victim to getting stopped out and then the market moving in our favor. Because I'm sure plenty of you have been in that position before where you get stopped out. Like, oh my goodness, I can't believe I lost, but I know we're going to go higher. And then markets reverse, right? Happens all the time. You're not alone. Happens to everybody, guys. Hit the like button if that's happened to you before, and don't lie. I'll know if you're lying. But as for the NASDAQ, right? So we would look for a short position. This is a 10-point stop loss. We could do the same thing. This is our short tool. Let's say we have a $200 stop loss, and we want to have a full 25-point stop loss, right? Well, then we could trade 0.3 minis. Well, we can't trade 0.3 minis. We would trade 3 micros. So 3 MNQ contracts would give me a 200-point risk on this stop loss. And look at this, still 200-point risk. It's a 4-to-1 risk to reward for an $800 profit. It doesn't matter how wide your stop loss is. What matters is your risk to reward on it as well, and that you're sizing in appropriately. A lot of people might see this trade, and if they're trading NASDAQ, they might take a full NQ contract here, not knowing that, okay, well, if I take a full NQ contract, my real risk is probably closer to $500. Look at that, not even $500. It still says 0.95 contracts, so it's still not even one full NQ contract. So you're risking over double your normal risk on that trade if you're not sizing in appropriately. And it's so important, guys, as traders, and to prove to Apex that you're consistent, that you're following your risk management, you're following your risk to reward. Now, let's take a look at, guys, if you want to look at any markets, definitely let me know. Been getting some crazy volatility all around the place. I know Nvidia also, I think today, hit 4 trillion in market cap. That is huge, guys. Let's take a quick look at Nvidia. Man, that is wild. All-time highs on Nvidia again. Great buying opportunity below those hundreds, and now we're up to 164. So, guys, when it comes to trading some type of all-time highs or areas markets haven't traded before, we want to mark out key psychological levels. And I mention this pretty often. So we'd maybe mark out like 160. We'd maybe mark out. So let's double-click this. Guys, another great trading view trick. I'm like a trading view whiz. Is you hit your horizontal ray, and then you're going to mark it out wherever. And let's say right now I marked it out to 161.31, but I want to mark out my key psych levels. I'll come back to coordinates, and I'll just change it right here in coordinates. So 160, enter. And I could duplicate that. First, let's change the color of it. We'll make it blue. We'll make it yellow, so we know it's more of a key psychological level. Then we'll hit clone. It added one at 164, so let's change that to 165. And then we'll have our next level at 170. And what we'll do, guys, is we'll find these key levels every $5 range, every $5 increment. So let's clone that one more time. Put it at 169.27. We'll make that 170. Fantastic. All right, so those would be my levels that I'm looking for on NVIDIA. Now, I'd also look to see we had support right down here too. We had support right near 153, 152 to about 150, right? Key psych level, 150, key full level. That is awesome. It's crazy how markets do respect these levels very often. Somebody asked for BMNR. I'm not going to go too far into technical analysis because this is more futures based, but this is one that we were watching actually when I was live trading with you guys in the Benzinga pre-market playbook, I think a week or two ago. So that was a pretty good one. Looks like these were the levels I was watching. So I was looking to see if we could come find support near VWAP, and it looks like we've just rallied since then, up until we had our sell-off today. So I'd be careful with something like this. Whenever it comes to marking out some type of stock like that, ooh, wow, look at that hourly. 120 down to 59. Wow. I'd leave that one alone, man, unless you're looking to short it. But that type of volatility, we see what happened last time we had a big spike. Then it pulled back 40, 50 points. Now we're having another big spike. We might pull back $30, 30 points. I call it points because in futures they call it points. But that's on BMNR. Definitely wouldn't be too interested in that. The reason I pull up things like Nvidia, Apple, Microsoft is because these are major large caps that help move the market. ES, NQ. These are major large caps that have a huge holding on ES and NQ. They're top 10 holdings on the NASDAQ and the S&P 500. Therefore, when we see a consistent trend on our equities, we usually see some follow through on our futures as well. Something I like to use, guys, is the weighted index. Now, this is basically, let's say you only have 2 monitors or you only have 1 monitor and you want to trade the ES and NQ. Well, then what you can do is you could have your ES on the top left, your NQ on the top right. On the bottom left, I keep my VIX. That's the VIX. Now, you could use the VIX futures too. That's /VX. I like to use the VIX index because it's got a little more volatility to it. The candles sort of form a little better. If you saw a comparison between the two, we could look to see if we could pull one up. Let's put the VIX right here. Actually do VX right there. Look how much choppier the VX is compared to the actual VIX. So some people, of course, it's always going to be what's your taste, right? Pick your poison. Do you like VIX? Do you like VIX? Me personally, I do like the VIX a little better due to that reason. And I also mark out key levels on it too, because it's important to know if ES and the VIX are both at a support or resistance point. I'm going to show you guys a great trade I took I showed you guys already that short on ES up here. I deleted the trade tool from this morning, but it was off of that 63.15 level. This was a really great entry. I was able to take that because we were in supply, because we found some selling pressure, and because look at the VIX. So ES is at supply. That's a resistance point. The VIX at that same time, so we could look at the crosshairs are lining up. The VIX was chopping on a support level. So VIX is at support, which means it's trying to move higher off of support. ES is in supply. It's trying to move lower off supply. Those correlate. We look for that when it comes to the ES and the NQ. I'm sorry, the ES and the VIX. We look for them to be inverse to each other. We want VIX to move higher. We want ES to move lower at the same time. So what helps is if we could find support on one, resistance on the other, or vice versa, right? So let's say ES was at a support level like right here. VIX came down, or at least came up to its previous session low. So previous New York session low, and it held it as a key level. And that's where ES started to base out and pull back too. So using things like the VIX, like the ES, like the NQ, like the weighted index, it gives us a good insight into market internals and direction without having to sort of try to guess everything, right? Supply and demand helps give us good market structure, understanding where buyers are associated, understanding where sellers are fitted, and just understanding good risk management too. Risk 200 per account if you're on an Apex account, depending on the account side. Let's see if we have some good slides up for you guys. So futures market hours, account sizes, and the 30% rule. So real quick, guys, for Apex Trader funding, a lot of people worry about the 30% rule, but let me just cover it real quick and explain to you why you should definitely not even think about the 30% rule. So here's some examples of a 30% risk limit on these accounts, guys. So a 25K account, 30% rule is drawn off of your 1500 trail stop. So let's be realistic here. If you're trading a $1,500 trading account, are you going to risk a whole third of that? You're going to risk $450 on that $1,500 account? No way. Because if you lose that one trade, you're down to almost $1,000 on your account, down almost 30, almost 40%. That next trade you take is going to be so beyond emotional. Not only that, but now you're only 2 trades away from blowing your account. And that would be if it was a real account. We want to trade these Apex accounts as if they are our own capital, because at some point we do want to get to our own phase where we're funding our own accounts, right? 50K account, max risk is $750, right? That's 30% of 2,500. Same deal. If we have a brand new futures account we're looking to trade, and we had to open a very small account, only $2,500, there's no way we're risking more than $500, let alone more than $300 per trade, let alone $750, guys. That is way too big of a risk. If you are risking that much, definitely time to sort of reevaluate your trading strategy and your system and how you're approaching the market. And guys, the tools are there. It's very possible 5-10 years ago, if somebody said could you trade? Could anybody trade? Absolutely not. Prop firms, Apex Trader funding gives the ability for anybody to trade, because again, it's not just paper trading. They're giving you the ability, and they're giving you rules, and they're giving you structure. Structure equals success. You find structure in your trading, you find structure in your routine, in your system, you'll find consistency. You'll find that journey gets a lot easier than when you're trying and you're struggling and you're forcing trades. So with the 150K account, guys, again, same thing. 30% of $5,000 is $1,500. If you had a $5,000 account, you're not risking more than $1,000. That would be way too heavy of a risk, let alone $1,500. So definitely don't even worry about the 30% risk when it comes to how much you should be risking, because you shouldn't be risking that much anyways. So what happens if you hit 1,200 in one day drawdown on a 50K? Is your account done, or can you still trade? So you could still trade. So this is a fantastic question, and this is actually going to be answered in this example right here. So you asked if you were down on your trade, but it's going to answer it in the inverse of that as well, and I'll answer it too a bit more clearly once I explain. So let's say you are on a 50K account and your best profit day was $2,000. Now, a lot of people might worry and say, oh my God, I just made 2,000, but that's way more than my 30% rule. They're going to deny my payout. Guys, it's calculated by your P&L from when you take the payout. So if your total P&L, right, so if you had your best day at 2,000, you would divide it by 0.3, which gives you the 30% inverse, right? So it does the math for you. It says your total P&L should be at 6,667. Now, if you go into trail down, you're down 1,200. Your trail stop is 2,500 on a 50K account, so you do still have some wiggle room. In my opinion, if you're that much down on a single day, close the monitor, close your screen, live to trade another day. Guys, remember those words, live to trade another day. Don't blow your account today. Tomorrow is a new day. Tomorrow might bring new price action. Tomorrow will definitely bring new opportunities. Don't blow it all on the day that you're already not doing well. There's a good chance you're going to continue not doing well. As for if you're down 1,200 on one day on the drawdown, that's okay, guys. You could build it back up. 600 the following day, make 600 the day after, just slowly make your way back up, but don't let it mentally and psychologically drain you. All right, so this means your account must show a total profit of at least 6,667 to remain within the rules limits. If your total profit is below that, you'll need to continue trading until you reach your target to stay compliant. Guys, yo, you got it, Ezekiel. But this is a big one too. A lot of people think, oh, well, if I do fail the 30% rule, then they deny my payout. I have to start over. That couldn't be any more wrong as well. If you go above the 30% rule and you're making good profits, but you didn't hit it on your first payout window. So let's say the 8 trading days comes, your best day was 2,000, but your total P&L is 6,000 even, right? So you're $600 off. That's okay. Go trade another couple days, make a few $100 each day, and get to this P&L. And then you're able to take your profit. That's okay. Take the payout. Go get that full take profit. Do your thing. Keep trading consistent. Don't worry about the 30% rule and take your payouts, guys. Apex will pay for itself. So the initial trailing threshold is used to calculate the risk limit, regardless of whether the threshold has been adjusted. Even if your trailing threshold decreases, your risk limit still references the original starting amount. So that's another great question. It sort of reflects off of Ezekiel's question where, what if I'm down 1,200? Can I still risk? If I'm down 1,200 on, let's say, 50K account, I'm down 1,200, right? So clearly that's above the 30% rule. They're not going to be happy with that. That's okay. You didn't blow the account. You didn't hit 2,500. You're able to bring it back, right? And if you can't bring it back the same day, you can't bring it back in 2 or 3 days, there's no rush. You bring it back. You just continue trading. Just keep trading. Just keep trading. Just got to keep it going, guys. Keep trading. Be consistent. Give yourself peace of mind that there's always going to be tomorrow. Give yourself peace of mind that if you do blow the account, you'll be able to get a new eval. You'll be able to start over. But again, don't let that mentality make you full port every trade you see. Let's see. So minimum required balance, guys. This is the minimum required balance for the minimum payouts. So if you're on a 25K account, you only have to make $1,600 in profit to take out $500. 50K account, you only have to make $2,600 to take out $500. Again, this is where, like I mentioned, you have to trade 8 trading days to take a payout. And this is the minimum. These accounts have a maximum as well. So 50K account minimum 2,600, and then your trail stop locks in at 50,100. Maximum payouts are right here, guys. 25K account is $1,500. 50K account is 2,000. And again, guys, this is per account. Let's say you have 10 50K accounts and you're able to take the max payout on all 10 accounts. That's 20 grand on that single payout. That's phenomenal. That is awesome. If you want to be a copy trader, I definitely recommend using something like Apex or even looking into their wealth charts option, because that gives you a great copy trading ability. And no maximum after 6th payout, right? So guys, this is the maximum payouts for the first 5 payouts you have. So 8 trading days, you take a payout, that's 1 cycle. Another 8 trading days, you take a payout, that's another cycle. So you could almost do 2 cycles per month. So about 2.5 months in, if you've been consistent enough and growing, you're able to then on the 6th payout, take whatever profit you have. Let's say you grew a 50K account to 100,000, but you've only been able to take 2,000 out each time, so it's only at 92,000. That's still great profit. You're up 40,000 on that account. I'm subtracting the 2,000 because of the trail stop. You're then able to, on that 6th payout, take that full 40,000 from that one account. And again, that's one account now. If you have 40,000 on 10 accounts, they're giving you $400,000 in payouts. Guys, they're not going to deny you if you're following the rules, if you're listening to everything I'm explaining today, and you're trading consistently. They do not deny you. I promise. They're a great company. They do well enough that they don't have to deny people for no reason, and they are just phenomenal. They're fantastic, and I 10 out of 10 would always recommend. So here's some tips for each account size. Now, something I'm going to mention due to all of this tariff uncertainty and concern is with these account size tips, I'd probably knock off a good $50 to even $100 per risk on these trades. And the reason for that is because there's so much uncertainty going on yet again. At the moment, because things have cooled down, it's July 9th. They moved the trade deal date to August 1st. We might get some smoother price action. I'm hoping to see July, because July historically, the past 10 years, guys, July has been a green month for the past 10 years in a row. So this would be year 11. We're looking for that consistency to follow. Guys, hit that like button if you don't know that. Got to make sure we know what's going on in the market economically, seasonality, everything, guys. It's so important. So 25K account, your trail stop's 1,500, your goal is 1,500. Usually I have the real risk being $150. That would give you 10 full trades to blow it. At this point, because of some extra volatility, I'd maybe only risk $100. If you risk 100 to make 200 minimum, you're going to pass the account in no time. It's not going to feel like any stress. Guys, yes, don't forget, win a free Apex Trader funded account right now if you fill out the form in the comments. Winner last week was Shannon. Great job. Congratulations, Shannon. You pick any account size you want. 50K account, your goal is 3,000. So now your goal is double what your goal was on a 25K account. And your trail stop did not fully double, but it's at 2,500. Gives you another $1,000 worth of original cushion, we'll call it. But your real risk usually would be 250 because, again, it gives you 10 wrong trades in a row to blow that account. Because of tariff uncertainty, again, right now, at this point, because they delayed it, I would like to see some consistent price action again until we get a little closer to August. But let's say things spark up. Let's say news comes out. We know that things could happen at the drop of a hat right now. Somebody could tweet something. Somebody else could respond to that tweet with something else. Anything could happen. We bombed Iran a couple weeks ago. Clearly, the world's going wild right now. And as traders, day traders, swing traders, investors, we want to know what's going on in the full picture. And that's why you guys have to follow me on Instagram is at Benzinga. That's our Benzinga page. And at Trading with Kev, that's my personal page where I post daily to every other day if a major economic event comes out. And it's so important to stay up to date with that. 150K account, we see now our goal is 3 times the size as our 50K account. So our goal is 3 times the size, but our trail stop is only 2 times the size. So you have to be a little more careful on your stop loss, but you do get more buying power. Real risk per trade on 150K with a $5,000 trail stop is 500. Same situation with this. I'd probably maybe only risk 400, maybe 350 with extra volatility coming into the market because we don't know when we're going to be trending higher, a tweet or a headline comes out, and markets completely crash. And when that happens, we won't get filled at our predetermined stop loss. We're going to get filled at a much wider spread, and it's going to have a bigger impact. And that's why it's important to size down sometimes in times of uncertainty. And the 250K account, guys, goal is $15,000. Trail stop is only $6,500. So again, they're not quite doubling your $9,000 goal, but they're only adding 1,500 to your trailing stop cushion. So something to consider. Regular risk is 650 on that. Usually 250K accounts aren't something that I'd usually recommend people go with. I feel like the goal is very high, and we're just better off maybe trading multiples of 50K accounts, multiples of 150K accounts. Because if we're looking at our max payout too, 250K is $3,000. 50K is $2,000. Well, then if you just have even two 50K accounts, that's 4,000 right there. That's more than your 250K account. Plus, you were copy trading and you didn't have to hit that much higher profit target. So you're trading more consistently, trading more reasonably, smaller size, and getting a bigger payout in that sense. So that's why I'd usually recommend maybe a few 50K accounts instead of having, a couple big 250K accounts. It's definitely great, if you're somebody that's comfortable with heavy positioning like that, 10, 15 contracts, you want to do something like that, that's great. Go for it, right? What's fantastic with Apex, again, is they don't really give us any strict rules of, if you blow 250K, you can't do it anymore. There's no rules of that. You buy a new eval, you start over. And trading is all psychology. So if you're somebody who's used to seeing much larger numbers, then you might be doing better on a 250K account. If you're somebody who does better with risking only 50 to make 100, 100 to make 200, 100 to make 250, then you might be better off with a 25K, a 50K account. It's all up to you guys because you are your own trader. You could follow me, you could follow the next guy. All that matters, the only common denominator in who you're learning from is you. The only one pulling the trigger on your trades, telling you to buy this long position, take this short position, is you. It's important to learn structure. It's important to learn economic data, how things are released, when things are released, and why things matter. But it's all up to you in the long run. So some common questions we'll cover from Apex Trader Funding that a lot of people do tend to ask. And guys, please let me know any questions in the comment section below. And don't forget to fill out that form for a chance to win a free Apex Trader evaluation account. Hit that like button if you learned something today. What a killer episode. So do I have to trade 8 days in a row? No way, just 8 total trading days. So guys, some people ask this and they say, do I have to trade 8 in a row? I don't think I can do that. I don't want to try to go too heavy in size. I might blow it. Take your time, guys. Take your time with this. There's no rule to, you have to have 8 trading days in a row. You have to have 8 trading days in a single month. Guys, you could trade Monday and Friday and maybe not hit that profit target or hit that goal for a few weeks or even a couple months. That's okay. That's all. Take your time with it. There's no reason to rush into it. And that's another great benefit of Apex Trader Funding. When do I qualify for 100% payouts? As we mentioned, on your 6th payout, you're able to qualify for 100% of your profits. How long do I have to pass the evaluation? Another great question, because right now they are running a sale where you could get funded in as short as 1 day. But there is no time limit. If you take a little while, you want to take your time, you want to get used to the system, you want to get used to TradingView, used to TradeOvate, trade some micros, get used to how they move, take your time with it. There is no time limit. Is there a daily loss limit? A lot of other prop firms have daily loss limits that really interfere with people's trading. There is no daily loss limit on Apex Trader Funding. They have their 30% rule, which is, again, mainly towards the profits, and they have their trailing threshold. That is their only stops. Do commissions count towards the trailing threshold? Of course they do, guys. Just like it's a real account, our commissions are factored in towards our P&L and our drawdown, so they are factored in and they do count. But remember, commissions are very small, usually 35 cents a contract, so nothing really major to worry about. You're not going to blow your account off of commissions unless you're maybe trading 100 micros per trade and you're getting in and out every 5 seconds. Then maybe you'll blow it with the commissions. Can I hold trades overnight? Another fantastic question. No. Apex requires us to close out all of our trades by 4:59 p.m. Eastern. This is when the futures market closes. So 4 p.m. Eastern, 4:59 I should say p.m. Eastern. And when are payouts processed? So guys, they used to have payout windows between the 1st and the 5th where you could request, and the 15th and the 20th. It's been a while now that there is no longer a payout window. Requests are reviewed once they're submitted, and if you passed it on a Thursday and you submit it, you could get approved on the Friday, on the following day. They are very quick. They have, over the past year, even 2 years, really increased their customer service, really increased some of their services. They are fantastic. Guys, any questions on Apex Trader Funding, please let me know. This has been a fantastic show. Appreciate you all for tuning in. Don't forget to run that like button up. Follow me on Instagram as Trading with Kev, and I will see you guys next time. Later.